Hi guys, welcome to another episode of Venkat and Randi. So guess what? We're going to talk about investing. All right. So my pal is on the other side of the screen,
Hey
and he's
guys.
going to walk us through a lot about investing. So I'm not going to waste any of our time, any of your time. So let's straight away dive into those questions. Venkat, you ready?
I'm ready, mate, Randy. Go ahead.
All
Let's
right. Very
start.
nice. So yeah, and here's my first question. So a lot of us talk about regular investing. You invest on CDs, or you have savings account, different types of savings account that you would rather put your money on this type of account, that type of account. So anyway, just give us an introduction as to what are the investment opportunities, or what are the non-conventional ways of investing.
Right. So this is going to be very short and sweet because we are going to have in-depth discussion on this in the future episodes, right, Randy? So
Right,
because of
right.
that, I'm just going to go, maybe probably just touch the tip of the
Basics.
iceberg.
Yeah.
So that's what we are going to do today, and that way we can limit and we can tell, like, give the viewers like what they really wanted, the basic stuff. So
Right.
let me. I think the for the non-conventional way, it's more of a, like, if you think about the conventional side of it, used to be like a traditional broker. So you basically work with a broker, the real person. Now these days everything is an online brokerage, right? So there used to be an online brokerage last few years, and now everything is like there are apps with the phone coming in, smartphone everybody's hand, right? So there are
Mhm.
apps out there. What the good thing with those apps are, like, there is no fee for it. Like online
Right.
brokerage, if you go with like Scott Trade used to be Scott Trade, TD Ameritrade now, and those are some of the famous on Charles Schwab and another one. So those are like they charge $5, $7 per transaction for stock trading, right? So, but the one that I'm going to talk about is like no fee. No, there's no fee for
Yeah.
anything. That
Yeah.
way, you like, if you're doing 1,000 transaction in a year, right? You are really every day you are working on it, and stock transaction. You might be spending several $1,000s just on the transaction fee, right? So these
Right.
things actually, those non-conventional ways, some of the things that I'm going to talk about, I'm going to actually show you the website itself. That way, it's easy for you guys to understand. And let me just share my screen here. The first thing that I would recommend is it's like it's a very famous. It's called M1 Finance. So you just basically go to m1finance.com. You can take a look. We will also have a link down below in the description. And actually, I would say just go to the research area here, right? And then you don't have to do any of the analysis. Like, if you wanted to just do something, invest like $100 or $1,000, you just go to here, expert buys, and there are multiple, like, if you are just a general investing, if you are planning for retirement, if you're responsible investor, if you have a lot of income coming in, you want to create different portfolios and all kinds of things that are already devised for you. So you just basically go and pick one of this. Like, there are other strategies here, and they call it like something called pies. So if say, for example, if you open up, and these are for the retirement. If you're trying to do retirement, like, you could just do select one of these. Let's say you're planning to retire in like 10 years. Let's just do this, right? They already have these figured out. That's going to give you 32% increase in your income, whatever you're investing. That's the thing here. So that I would say, just go ahead and sign up for this M1 Finance, and then just look for this research. Here there are news. If you want to do too much of it, you can just still do it. But if you want to invest on the stocks, there are like multiple categories. They have like separated everything for you. It's so easy that you can just you don't have to do too much research or anything. You just if you are planning to invest on the real estate, but you don't have too much money, you basically just go and select the stock, the companies that invest on the real estate. So That's what it is. So you can see here like 33% in 1 year, and some of them like in 3 years this is like 15%. Like all these are really good. You can pick and choose one of these, and then invest on these stocks, right? So that's a key here. And again, on the funds, you can go keep on going. um, so but I would say this is one site that I would highly recommend. And then there is something called acons, which is like, if you're spending like everyday spending, right? If your spending is like 10.57, and then the 43 cents will go into investing, the change, whatever the change, it will round up. It's called something called round up, and it will go into investing. Same thing, like, another one called Robinhood. It's very similar to M1 Finance, and another one called Webull. These are like I would say Webull, Robinhood, or M1 Finance. These three are the ones that you should take a look. Out of these three, M1 Finance is the one I have, and I actually haven't tried this Robinhood or Webull, but this one works really good, M1 Finance, for non-conventional ways of investing, right? Let's stop there, and then we can go in depth on these in later episodes.
Venkat, couple of quick follow-up questions. So, it's MI Finance, is that right?
It's M1 number one, M1 Finance.
One Finance.
Right.
Robinhood, is that right? That's the third one.
Robinhood, and then the Webull.
Webull. Okay, guys.
Right.
So here's a very quickly. I'm not going to take more than a few seconds. So if you have any questions, on any of these sites that Venkat showed you, please feel free to ask the question on our channel. So is that right, Venkat? I mean, they can reach out to you directly, or they can just type their question on our channel. Do you have any preferred method, or do you have any?
No, yeah, they can actually leave a comment below, and we like, I'm ready to answer anything. That awesome. There are so many questions, like we are not going over everything today, but feel free to ask any questions.
Yes. Great. So thanks so much, Mike. I mean, that's a great introductory to non-conventional investing. And like he said, feel free to ask any question. I mean, just on the comment boxes, just ask your question. All right, let's dive into the second one. So, all right, this is a great question I got for you. Okay, so most of us live paycheck to paycheck. All right. So, I mean, some of us have been lucky with a lot of savings in our accounts, but some of us don't, right? So what is your, how someone who lives the paycheck to paycheck invest? I mean, is it even possible, or what is your thought on that?
Right. I think there's a lot of ways to do that. There's basically, like, if you are making $2,000 a month, let's say $2,000 a month. And then first thing that you need to see where the expenses go, like where does, like, you're spending like almost $19.90, so you left with $10. Let's say that, right? And where does the expenses, where you're spending all the money? Just look for something that's a huge amount, right? If you're spending $500 for something that's not needed, just stop that. Probably Starbucks. The most people spend on coffee, cigarettes, and liquor, those probably, and the restaurants, right? So you don't need to stop it. You can just try to do in a different limit it probably. And just first thing I would do that, right? If I were that person, then the next thing is I will try to find another job. I'll try to find another job just to, like, there's always like thousands of jobs out there. And if you wanted to, move 10% higher, 20% higher, you want to make, because your expenses cutting so close, right? So I would find another job that pays like $2,500, right, every month. So it's $500 more, but so that means you have $500 worth of money that you can invest on, right? Let's say that's like a couple of ways to reduce your expenses like. And another thing is a saving money. You could save money, more on like don't spend on something, so that way you are going to reduce your expenses. So everything revolved around your expenses based
So
on.
it sounds like budgeting. Is that right? So
That's
you figure
probably,
out
yeah, yeah.
what
So
are the expenses that you're not really. I mean, there's some expenses if you just budget it and put it on an Excel spreadsheet, right? Simple.
you don't need to
Your
extra. You can just write it on a pen and
piece of paper
yeah, piece of
and
paper
just see
and.
how much you spend on
Right.
Starbucks. So, I mean, why
Every
do you
small
need
thing,
that?
yeah, every small thing adds up, right? So just add up everything and just to see it. I would say once in 6 months you do this. It's actually good for your growth. Like if you are spending some like on something that is not needed, you really know it, and you're not addicted to it. You stop doing that, right? Unless you do this exercise, you won't know where you are really spending your money. That just basically tells viewers that just like you said, budgeting and trying to do self assessment on the finance side of it, right?
Right.
But that's another thing to increase your earnings, or just to have the same earnings but have more money in your pocket, right, at the end of the month. So that's a couple of things they can do just to improve. And then the other thing they can do is like acons investing, right? We just talked about acons. It does is a spare investing. So like let me show you real quick here. So they can go to acons.com and then just sign up for it, right? And then and then like if you're and then connect your credit card or the debit card or whatever the cards that you are using for your expenses, anywhere like shopping, anywhere you do the expenses, just use that card. And what it does is it automatically rounds up, right? So if you're using it for 10, like I said, 1060, and then 40 cents change will be invested into acons automatically. So
That's a good one, Venkat, because what I have seen happening with most of us is like you said, if you spend 10 and it costs only 9.40, so the 60 cents or whatever that remains, you just don't use it at all and just throw it away, right? You cannot even find where the balance was. So rather than doing all that, you can go to this website and without even knowing, you're investing whatever is left, right? After spending the whatever that you're planning to buy, whatever is left after paying for that particular thing, you're without even knowing, you're investing the rest. That's awesome.
exactly, yeah. Every small spare change, even like 5 cents, 10 cents, adds up, right?
Right.
And then if you have $5, once it adds up to $5, it gets invested, right? And then
Right.
let's say your $5 gets invested, and then there's a 10% increase, 10-20% increase. So you have $6, and then like
Okay.
every time you have more money, and it's eventually at the end of the year, like you might have like couple grand of money, right? A couple thousands of dollars in your Acons account. You started with nothing and you have $2,000. Now $2,000 being invested on something, and it gets added and increased. Like you have more investment opportunities coming up on you, and then that 2,000 or $3,000 can be added into M1 Finance or Robinhood, and
There
then
you
you
go.
keep churning the same thing, rinse and repeat. Same thing. Then you basically have that money flowing, even though the money in the beginning would be very small, but after a few years it's going to grow for sure.
Great. Awesome. Again, guys, if you have any questions, just put your question on the comment box. All right, moving on. Venkat, like I said, this is kind of related to the question that we just spoke about. But some of us, like I said, some of us are lucky enough to have savings on our account. Thousand could be thousand. I remember my sister when she was a student, she wanted to have just thousand on her savings account, and she says that she would be lucky if she had $1,000 in her savings account. But anyway, $1,000. Some people are even luckier than that. 5,000, 10 grand, 50 grand, 100 grand, or whatever. So, what is your advice? Like, how someone with those categories, let's say someone has $1,000, how does that person invest? Like, is it even possible? Again, my first question: is it even possible to invest with 1,500? How do they invest? Like, what are the best investment opportunities for someone who has 1,000, 5,000, 10,000 or more?
Right. Yeah. It's there are a lot of ways to do it, but because I'm going to show you something that doesn't involve any fee,
Okay.
and we already talked about that. It's called M1 Finance. So
Right.
what I
Okay.
did, I'll just show you this example, right? I'm just opening up this one of
Yeah.
my portfolio site, right? This I just put like I think 3 months ago I put $5,000 here. You can see, and then it grew $400. I didn't do anything. It's
Anything.
very like I had $5,000 extra. I thought, let me try that out. I'm not
Yeah.
gonna withdraw anything, and then just so I just want to try it out. I just put it on 5,000. I didn't
Wait,
put.
quick question.
Sure.
Sorry to interrupt. So you can, what's the minimum investment amount for this?
This one needs only $100.
$100.
So
So
yeah,
if you have
yeah.
$100, go for it.
Right, exactly. This one needs $100, and actually, Robinhood doesn't need anything. I guess unless they changed it recently, like
Okay.
it doesn't need any balance. So you can open an account with Robinhood, and but it doesn't make like you had to open with some money, right, to make some
Yeah.
money. So yeah, and another thing, like with our referral link, we are going to put it down below. You will get $10 just by opening an account
Okay.
with the M1 Finance. And same thing with the Robinhood, we will have some money coming to you. I think $20 just for opening. And same thing
So,
with Webull,
so
just for opening there's a bonus. Yeah, go ahead, Randy.
nice. I mean, I couldn't just wait to ask this question. So, if the $100 is the minimum, so you kind of answered my question, right? So my question was like, if someone has $1,000, 5,000, whatever, what are the best investment advices that you can share? So go to MI Finance. You only need to have $100, and just you literally don't have to do anything, right? The $100 will sit there, and you can see how your investment is doing. Is that right?
Right, it's pretty easy. Just to, like, you basically have to do a pie. Like, let me do one thing. I can actually demo it. Say I open an account. I'm just going to export pies, right? Let's do I just wanted to do something really simple, right? I wanted to, like, let's see here, 1 year. Say this. Look at the 13. Like, I want to make 13% gain. So I would pick this thing,
Okay.
and let's go ahead and pick this thing, and then you just add to your portfolio. Say you have $100, right? This is the percentage. So $34 will go to here, and $29 will go to here, $13 will go to here, $9 and $7, and $7 here, $1 here.
So when can are they, like you said, $100? Some $5 go
The
will go.
percentage, yeah. Like if you
Is
put
it like different? Are they different types of investments or different companies or what?
Yeah, like if you go here, right, you can click and see. This is Vanguard.
Okay.
It's a ETF, exchange traded fund,
Okay.
and so this exchange traded fund is a combination of multiple well-performing companies.
Mm-hmm.
So this is like like sometimes you just like look for this ETF that's performing well. In this
Mm-hmm.
case, like I think the dividend yield is 1 point. On top of that, there is another thing that I wanted to mention in this thing, emphasize basically. There is a dividend also being provided, right?
Oh, okay.
Uh, on like for $100, you're gonna get $1.92 for every $100,
Every $100.
and it's just the interest income coming to you I think it's every year, right?
So this is specifically on Vanguard
No,
ETF.
it's almost the M1 Finance that we are doing the fee free investing. That's actually involves most of them are like
Okay, okay,
this invest the dividend investing. So
okay.
just go back here, and if you look up, so I would just say, like, go here, pick up one of these. Let's if you want to go here, and then look for 1 year shorter term. If you're looking for shorter term, you can do that. And this, like, anything higher, like 2020 aggressive,
Mm-hmm.
which is going to give you more, like 15%, right? Or you could
Okay,
just do, like, if you think this, if you want 15%, you can put all the money, $100 to this.
okay.
So you're gonna get it's 15% is gonna vary, but you'll have you will have very close to that. That's exactly what this because these are all tried out already. They're recommending to you. The other people are actually using these.
And when can what is so there are six categories under MI Finance: a general investing plan for retirement, oh, seven, right? So if you like the one that you showed us, the Vanguard, so is it under
It's under
e-commerce or
general
is it
investing
general
here, right
investing?
here,
Okay,
right,
right.
right. Or you can do a risk, like, it's basically risky, more risky, less risky, medium risky, right? If you
Right,
go
right.
with the high risky, that's going to have a higher return on
Okay,
investment.
right,
If you
right.
go with the
That's right.
less risky, that's going to be less return on investment, but it will be more safer. Something
Right.
like bonds, right?
Yeah.
So those are some of the things. But if you don't know anything about it, this is the way to go. You just go here, just click on something. You don't even need to know, like, this is 20%, this is 34%. You probably know, oh, 34% is bigger than 20%. So
Right,
I will
right.
just go here, and then
So,
I'm just going to add into my portfolio. I have $100. It's going to be split out automatically.
and it's very self explanatory, right?
Yeah,
So it's very
yes.
easy to, so it gives you the directions in a very easy way. So if you're a beginner, it just guides you in a very, very easy way. So just go there, open an account. All you need is $100. Just go for it. So that, and thank you, Venkat, for sharing that. Unless you have anything to add to it, I can move on with our next question.
Yes, actually, if it's $10,000, I would say anything about $10,000. Let's say you have $20,000, or 30,000, or $40,000, right?
Yeah.
I would go with the real estate investment, right?
Okay.
Just look for a deal, and that gives you that you can put like 20% on it. Like, if at least like 200,000. If it's a $200,000 house, a
Okay.
townhome, right? It's going to need $40,000 of your money for 20%. If you want to put 20% of it, at least you
Right.
need 20% for the investing. So if you have that much of money, you can try that out. The real estate investing, that's
Okay.
another option. And if you have more money, I would buy like a duplex or triplex, those kind of things, and that's going to give you cash flow. That's going to give you tax benefit, and there are other additional real estate benefits to it, right?
And Venkat, so the options that you just mentioned, are they under responsible investing or under what category? Like, if you can just
It's no.
share
Right now, it's not in the amount finance. It's actually,
okay.
I'm talking about, in, like, if you have a higher amount, like 40,000, 50,000, hundred
Oh,
thousand
okay, in general.
dollars.
Okay, I
Just
got it.
use it for the real estate investing for
Oh, okay.
highest investment return on investment. That's basically. You can still do it here if you don't want to. If you want it to be, I think we are going to talk about it, passive investment, right? If
Mhm.
you want it to be totally passive, you can do it here. If you wanted to have a little bit of partially passive, you can do it in real estate investment.
So you kind of opened it up. So yeah, let's talk about passive investments. Like, some of us, we have full-time jobs and we really don't want to get involved full-time with some investing activity. So what are the passive investment approaches, or what are the passive investments that someone can think of and be successful?
So let's say let's take a scenario, right? You have $5,000 extra cash flow coming every month. You not cash flow, like every month, your income, you're saving $5,000. Let's say
Hmm.
that, right? And then you don't know what to do with that, but you don't have too much time to spend on anything that needs babysitting
Right.
continuously.
Right.
So I would do I would just take do it in a 5 different places. All those will be passive investment, right? So we already talked about M1 Finance. So probably take $1,000 and put it into this based on your interest, like where you want to be in like next 5-10 years. You can put it in one of these categories. That's what I would do. And like say $1,000 goes into M1 Finance every month, and then we are left with $4,000. So here we will talk about in depth in the future what exactly how to choose and everything. But
Right.
right now I think I'm just trying to
Yeah.
limit
No,
our
this is
time.
great opening though.
Yeah,
This is
yeah.
great information.
Yeah, definitely. And then another 1,000, like you do want to like, keep an emergency fund, 6 months emergency fund. That's critical, right? Your expenses say $5,000 every month. You need to have $30,000 in a bank account that's easily cashable, right? Like you can go to ATM and withdraw money, $30,000 right now. Not the ATM. Like if you want to go to bank, you can withdraw. All those accessibility should be there for the emergency fund. So make sure you have 6 months of emergency fund, and just add that into the savings account here. For the regular, instead of regular savings account, just that's just only give you with the traditional brick and mortar banks, right? They only give you 0.01% or something. You might get $1 for every $10,000 or something like that in a year. So you don't want to do that, and open an online account there. For the online savings account, I would highly recommend Ally Bank, which is highly safe, $250,000 FDIC insured bank.
Okay.
So it used to be like 2.8, 2.6% or something like that. Now it's because interest rate are down, and it's right now it's at in October 2019 it's at 1.8%. So it's still a good thing. Like if you have if you can keep putting like $1,000 into it or $2,000 into here, that's what I would do every month.
Wow, this is great.
Right.
Uh, so 1.8% yearly annual percentage yield is 1.8%. So if you put 1,000, so that's totally passive. So we just put 1,000
You
and
get $18 in a
it
year, right?
great.
Yes.
Yeah.
And yeah, eighteen
Great.
dollar in a year, and then it's cashable, right? That's a good thing. Like they will send you a checkbook. They'll send you you can wire them up to your local bank, and then you just go to the local branch and withdraw the money, or you could just use the card itself if you really want to use it for something emergency fund.
And you can open this account online. So it's that easy.
Exactly. Yes. You can open this online. We will have all the links down below in our description,
Right.
and so you don't have to go and hunt for the links, and we will have everything down below. And another thing, like for the rest of the money, you can actually play around and see what works for you. Like everybody's goal is different, but I would put something in Robinhood sometime, because it's the structure in here is a little different. All of this doesn't involve any kind of fee, so that's why I'm recommending this to all the viewers. So and then you can sign up for the accounts like we mentioned before, and just have those changes invested. And then there, like if you really want to invest on the real estate like we talked about, you can actually buy the condo or townhome and rent it up. That's another way that we will be talking about in the future. How do you do that? But if you don't want to involve in that, there's something called REIT, Real Estate Investment Trust, which is basically like the companies you are investing on, the REIT companies, and they instead invest on the actual real estate. So say for example like McDonald's, they own their buildings, and then there are other companies like FedEx, some of them owned by other companies. FedEx is renting it out, and they rent out probably like 10 years, 20 years, right? So you are basically investing on those companies that are having the buildings of FedEx, UPS, other big businesses. That is this one, REIT, investing. So it's actually you are investing in real estate in not in actual real estate, but on the companies that are investing on the actual real estate. So in the cities and big cities, you see all the buildings and everything. Those are basically the REIT investments. So you are investing on part of it, part of different buildings, and then if they make money, say they're going to have a cash flow, they're going to grow, and whatever they're making money, they're going to give you a little pie of it, right? So that's another way to invest your money on. So the $5,000 basically you can invest on all different things. I would say 5 different things for now, and then just split them up. So even if something goes wrong with one thing, you're not losing all the money. That's my advice.
Great. So, Venkat, this is like pretty deep, but we're gonna have like individual episodes probably based on your request. We will definitely have some episodes dedicated just to talk about certain specific types of investments, like Venkat said. So feel free to ask your question, and the links will be down below. And again, like he said, this is just an introduction for investing, and a lot to cover, a lot to share. But we will cover all those things in future episodes. So let's dive into our last questions. I think we actually touched base on this question. I was going to ask you what are the higher return on investment opportunities, but you kind of briefly touched base on this topic. But if you want to add anything to what you've already shared, this is the time.
Right. Yeah, I would say like normal stock market gives you 7%. And then like if you do index fund, right? Index fund, so you might get 10%. But if you do real estate, like real estate would give you more percentage return on investment. It's not going to be direct, like normally like cash on cash return, probably around 7%. So if you put like $40,000 we were talking about before, right? If you put it on a condo, and then your cash flow, say maybe $500 a month, right? Let's say $6,000 a year is your cash flow. 6,000 divided by 40,000, which is 6,000 divided by 40,000.
So when can quick
15%.
Question. Sorry to interrupt.
Yeah.
So you mentioned about 500 cash flow. So you mean like the profit out of the condo, like your rent? So you're putting the 40,000 down, right?
Yeah.
And you have to pay the mortgage, and at the same time you're renting it out, and 500 is your profit. Like the difference between your mortgage and the rent income. Is that what you said? Sorry.
Right. That's right. Like say you put 40,000 on 200,000 condo. Right. And then you're actually getting mortgage for 160,000, right? 160,000 approximately around. Let's say you have to pay $1,000 everything included to the mortgage, and then you're renting it for 1,500. Let's say you're renting it 1,500, right? So the 5,000 is the cash flow that you can pocket it, right? Without doing anything. You do have to do some little bit of work. So 500 every month is 6,000, and then you put only 40,000, even though the rest of them are mortgage. You put 40,000, and then it's actually that itself gives you the cash flow itself gives you 15% return on investment, 15%, right? So 6,000 divided by 40,000 is 15%. On top of that, actually, say you make 120,000, 100,000, something like that, right? In a year on your regular job, and you have to pay like say 20% tax, right, on that state and federal tax.
Right.
And then what you can do, there's a tax you're paying on this, there's an interest you're paying on this rental property. So you basically climb all those things. So you might get another like say 5% more. So it's going to be 20%, right? and then this is not like it doesn't end there. It actually, like, after, let's say, 3 years, that 200,000 condo become 250.
Yeah.
So
Correct.
that's 25% more. You have 50,000 equity on the house. That's
Right.
25% more on each year, right? Are like
So you
almost,
get the equity plus all everything.
yeah.
That's,
So
yeah.
I would say around 20% average you would get return on investment on your money on the real estate.
So
Then
your preference or your rather your recommendation, if you have, I mean, if you want to go for a higher return on investment, real estate is the best. I mean, is this time of the year, or is this time in general in the United States? Is it good for real estate investment, or do we have, if someone is kind of thinking of doing real estate investment, is this a good time for that?
yeah, I would say for any kind of investment, just do a dollar average, right? Dollar cost average. They call it something like, you buy it now. Say you buy now, it could be a little higher. Let's say after a few years, it's lower. You buy it that time, and then even lower, you buy it again, right? So there are, like, in the average, when you average it out, it actually ends up being the same. So it's not like you wait for some recession, you wait for something going to happen. And I like, if you want to invest, just invest like a little bit of, just spread out in a multiple time. If you're trying to buy two condos now, just don't buy two, just buy only one. Just
Okay.
wait for 2 more years, buy another one. That time maybe the price is low, right?
Right.
Or it could be higher than now, so still buy it, but just buy one. Don't try to buy
Okay.
everything at one time.
Right.
Same thing
Don't
with,
dump all your money in the same time frame. So
right,
just spread it out.
right.
Okay.
Yeah, that's same thing with other M1 Finance or Robinhood, right?
Right.
Try to put like $50 every month on each one of
It's
one.
that easy.
Yeah, one critical thing I want to say there is, the main thing is, like, if you want to invest on Apple, Amazon, the big companies, you can put $1 on those companies.
Right.
Invest it, like, if with the traditional ways of investing that we talked about, the difference, right? This is the main difference. The investing through this M1 Finance, you can split up. Like, you don't have to. Like, if $200 is your one share of Amazon or Apple, you don't have to have $200. You can put $10 there, and it's going to be 0.05% of Apple. You own it, right? So that's how it works, and then it could become 0.1% eventually, and then if you let it grow for, like, say, 5 years, you might have
Yeah.
two three shares in the future, and that might be $1,000. Who knows, right?
Exactly.
That's how that's the best way to invest on any big companies. Split those. It automatically gets splitted. You don't need to invest the whole thing.
Right. So it's just like, you don't put all your eggs in one basket, right? Just
Exactly right.
like that, spread it out. Great, Venkat. Thank you so much. I mean, I learned a lot. Like, Venkat is the expert, so I only wanted to ask the general questions because of one reason is it's not my area of expertise. It's my friend Venkat's experience. Venkat's expertise is there investing. So, if you have any additional questions, please feel free to ask your question on the comment box below. And also, Venkat is going to share all the links that we talked about. And like we said, we're going to talk about those specific categories in the near future. So stay tuned, guys. And Venkat, thank you so much. And it's goodbye for now from Venkat and Randy. And see you soon. All
Thank you,
right.
guys.